There's a quiet lie sitting at the center of modern retirement advice. It doesn't scream, it doesn't look dangerous. In fact, it often comes dressed as guidance, responsible, even helpful. The lie goes something like this: if you don't have $1 million saved, you're not really ready to retire. And that single idea has caused more anxiety, more sleepless nights, and more bad decisions than almost anything else in personal finance. It has pushed good people to work years longer than they needed to. It has whispered shame into the ears of people who are actually doing just fine. But here's what nobody talks about. There's a group of people walking around right now with modest savings, modest homes, and modest lifestyles who feel more financially secure than millionaires. And the reason comes down to one thing. They have a pension. And once you understand what a pension really is, what it really does, and why it quietly changes the entire shape of retirement, you'll never look at money the same way again. You'll stop comparing yourself to magazine covers. So let's talk about it. Let's talk about why having a pension in retirement changes everything. Not just a little, everything. The way you spend, the way you sleep, the way you make decisions, the way you handle market crashes, the way you think about time itself. All of it shifts. And by the end of this video, I want you to see your own situation through a clearer lens. Before we continue, if you haven't hit that subscribe button yet, this would be a really good time to do it. I make videos like this one every single week, and I promise I don't waste your time. Now let's get into it. Let me tell you about two people. Let's call them Patricia and Ruth. Both of them retired at 65. Both of them worked hard their entire lives. Both of them live in modest homes that are fully paid off. From the outside, they look nearly identical. Same neighborhood, same lifestyle, same age. They wave to each other in the mornings. But underneath the surface, their financial lives could not be more different. Patricia worked as a public school teacher for 34 years. She didn't save aggressively. Her retirement account holds about $145,000. By every traditional measure, the financial industry would tell her she's behind. They'd shake their heads, frown a little, and gently suggest she keep working. But Patricia gets a pension. A real one, about $4,200 a month for the rest of her life, with cost of living adjustments built in. That changes the entire equation. Ruth, on the other hand, worked in private sector management. She was diligent. She saved religiously. Her 401k has grown to nearly $890,000. On paper, she looks like a retirement success story. The financial magazines would feature her. The advisors would call her a model client. And yet, Ruth wakes up at 3 a.m. some nights, staring at the ceiling, doing math in her head. Why? Because Ruth has to make that $890,000 last for potentially 30 years. She has to worry about market crashes. She has to worry about pulling out too much too soon. She has to worry about inflation slowly eating her purchasing power. She has to worry about a single bad year in the stock market wiping out years of progress. Her wealth is real, but it's fragile. It's exposed to forces well beyond her control. Patricia doesn't worry about any of that. Her $4,200 shows up every single month no matter what the market does. If stocks crash tomorrow, her check still arrives. If inflation rises, her cost of living adjustment kicks in. She has what Ruth desperately wants but can't buy at any price: certainty. And certainty in retirement is more valuable than almost any amount of money. Think of it this way. Your income floor is like the foundation of your house. Strong, underground, invisible, but holding everything up. Your savings? That's more like the furniture. Beautiful, useful, important. But if the foundation cracks, the furniture doesn't matter. A pension is foundation. A 401k is furniture. And most people have spent their entire lives polishing furniture while ignoring whether the foundation underneath them is solid. This is the part that nobody tells you. The financial industry has spent decades convincing you that the size of your nest egg is the only thing that matters. They show you charts. They give you calculators. They tell you to hit some magical number like 1 million or 2 million or 3 million. And in doing so, they've quietly erased one of the most important truths in retirement planning. Income matters more than assets. Let me say that again because it's important. Income matters more than assets. The real question isn't how much have you saved, it's how much do you have coming in every single month for the rest of your life, guaranteed no matter what. That's the question that actually determines whether retirement feels like freedom or feels like fear. That's the question that determines whether you take that trip, buy that gift for your grandchild, or fix that roof without flinching. And this is where pensions become almost magical. Because a pension is not a pile of money. A pension is a stream, an unending, reliable, predictable stream of income that flows toward you every month for the rest of your life. It doesn't care about the stock market. It doesn't care about recessions. It doesn't care about your withdrawal rate or your investment allocation. It just shows up, like the sunrise, like the tide, like something you can actually count on. Now, I want to do something most people never do. I want to show you what a pension is actually worth. Because when you see the real number, it changes how you feel about your entire situation. Most people who have pensions dramatically underestimate their value. They look at their friends with big 401k balances and feel small. They shouldn't. They've been comparing apples to oranges. Let's say you have a pension that pays $3,000 a month. That's $36,000 a year. Doesn't sound life-changing, right? But here's where the magic happens. To generate that same $36,000 a year from a savings account using the safe withdrawal rate that financial planners recommend, you would need somewhere around $900,000 saved. $900,000, just to match what your pension does automatically. And it gets better, because that pension keeps paying you no matter how long you live. If you live to 95, it pays. If you live to 100, it pays. A $900,000 nest egg might run out. Your pension never does. So when you compare yourself to that friend with the 7-figure portfolio, remember this: you may already have what people with millions are searching for. You don't have a smaller retirement. You have a different shape of retirement, one built on permanence instead of accumulation. Let me ask you something. Have you ever calculated what your pension is actually worth in real dollars? Most people never do. They see the monthly amount and shrug. But if you sat down and ran the numbers, you'd realize you're not behind, not even a little. You might actually be ahead of most of the people you envy. The wealth just doesn't sit in an account where you can stare at it. It sits in the promise of next month's deposit. Here's where things get even more interesting. There's a hidden enemy in retirement that quietly destroys nest eggs. It's not the stock market. It's not bad decisions. It's inflation. Inflation is like an ice cube in the sun. It doesn't melt all at once. It creeps, it nudges, it slowly raises the cost of everything around you. Your groceries, your insurance, your health care. Nobody told you. It just happened. If you retire today on $4,000 a month and inflation runs at a modest 3% a year, that same $4,000 will feel like about $2,200 in 20 years. The money didn't disappear. The purchasing power did. And that's the silent eroder that crushes retirees who depend purely on fixed savings. They wake up at 75 wondering why everything feels so tight when they thought they had plenty. They start feeling, slowly, that their world is shrinking. But here's what most pensions include: a cost of living adjustment, or COLA. Not all of them, but many do. And when your pension includes COLA, you have something most retirees would trade almost anything for. You have an income stream that grows with inflation. Your buying power stays steady. You don't shrink as time goes on. You stay whole. You keep the same dignity at 85 that you had at 65. Even pensions without full COLA adjustments still provide tremendous stability compared to drawing down a portfolio, because the base income never runs dry. It's not depleting. It's not fluctuating. It just keeps flowing. And when you pair that base income with Social Security, which does have built-in COLA, you've suddenly built a retirement that's resistant to one of the biggest threats out there. You've built something that can weather decades of storms. Now let's talk about something that doesn't get discussed enough: the emotional side of having a pension. Because retirement isn't just a math problem. It's a feelings problem too. Numbers matter, but how you feel about those numbers, that matters just as much. And the emotional difference between pension retirees and non-pension retirees is staggering. Think about Ruth again, with her $890,000. Every time the market drops, her stomach drops with it. Every time she takes a withdrawal, she second-guesses herself. Should I take less this month? Should I postpone that vacation? Should I worry about that big repair? She lives in a constant, low-level anxiety, even though by every traditional measure, she's doing great. She checks her portfolio constantly, and every headline feels personal. Patricia doesn't live that way. Her pension hits her account on the same day every month. She knows exactly what's coming. She plans her life around a known quantity, not a fluctuating one. When the market crashed last year, she barely noticed. When inflation spiked, her COLA adjusted. When her car needed repairs, she didn't panic. She just paid for it from her regular monthly check. She reads the morning paper with coffee and moves on with her day. That's not a small thing. That's everything, because chronic financial stress doesn't just affect your wallet. It affects your sleep, your health, your relationships, your sense of identity. People with pensions tend to live longer, sleep better, and report higher life satisfaction, not because they have more money, because they have more certainty. Stress lives in your body. It raises your blood pressure. It steals years. Here's a question. If you had to choose between more money or more certainty, which would it be? Keep that in your head as we go. Because most people, when they really think about it, choose certainty. They just didn't know they had a choice. They thought retirement only came in one flavor: accumulate as much as possible and hope it lasts. There's another flavor, a better one, built on guaranteed monthly income. Now let's talk about one of the most overlooked advantages of having a pension. It changes how you can use your savings. Stay with me here because this matters. When you don't have a pension, your savings have to do two jobs. They have to provide your monthly income, and they have to grow enough to last decades. That's a lot of pressure on one pile of money. When you have a pension, your savings get to do something different. They get to be opportunity money. They get to be the fun fund. They get to be your emergency cushion, your travel fund, your gift to the grandkids account, because your monthly bills are already handled by your pension and Social Security. Your savings aren't a survival tool anymore. They're a freedom tool. And that distinction is everything. Imagine your retirement in two parts. Not one big number, two distinct piles. Pile 1, income that shows up no matter what. Pile 2, your savings. When Pile 1 covers your needs, Pile 2 becomes pure flexibility. You can take more risk with it because you don't need it for groceries. You can spend it more freely because it's not your lifeline. You can pass it down because you don't have to consume it. It becomes a tool of generosity, of adventure, of legacy. This is why pension retirees often die with money in the bank, while non-pension retirees often run out. It's not because pension retirees are richer. It's because their money has a different job. Their savings can grow alongside them rather than slowly draining underneath them. That distinction changes the entire feel of retirement. There's another thing I want you to think about: survivor benefits. If you're married, your pension may have an option that continues paying your spouse after you're gone. And if it does, that's one of the most valuable things you can possibly leave behind. Because here's something most people don't talk about. Retirement is dangerous for the surviving spouse. It's a season nobody prepares for properly. When one spouse passes, the household typically loses one Social Security check. Bills don't drop by half. Property taxes, insurance, utilities, they barely change. The surviving partner often faces a sudden, painful drop in income at exactly the moment they're least equipped to handle it emotionally. A pension with a survivor option softens that blow. It keeps income flowing. It keeps stability intact. It lets the surviving spouse grieve without also panicking about money. Here's a question for the married folks. Have you and your spouse ever actually talked about what happens if one of you is gone? It's an uncomfortable conversation, but if you have a pension, the choices you make about survivor benefits can either protect your spouse or leave them exposed. This isn't just paperwork. This is love made into a financial structure. Let me share something that took me years to fully appreciate: the compounding power of pensions. People talk about compound interest all the time. They show you charts of how money grows over decades, but nobody talks about the compounding power of guaranteed income. And it's just as powerful, maybe more, because guaranteed income compounds in dollars and in decisions, in all the panic moves you never had to make. When you know exactly what's coming in every month for the rest of your life, you make different decisions. You don't panic sell investments in a downturn. You don't lock in losses out of fear. You don't make rash choices because you can ride out storms. Over a 30-year retirement, that emotional stability compounds into very real dollars. Pension holders preserve more of their savings simply because they don't have to touch them as much. And there's another quiet benefit: the freedom to delay Social Security. If your pension covers most of your basic expenses, you can hold off on claiming Social Security until 70. And every year you delay past your full retirement age, your Social Security benefit grows by 8%. That's a guaranteed 8% return that nobody else in the financial world can offer you. By 70, your check is significantly larger, and that larger check keeps coming for life. Non-pension retirees often can't afford to wait. They claim early because they need the income. They lock in a smaller benefit forever. Pension holders have options. They have flexibility. They have time on their side. That's worth thousands and thousands of dollars over a lifetime. And it's only possible because the pension gives them a base to stand on. The pension buys them patience. Now let me speak honestly for a moment, because I know what some of you are thinking. You're saying, but I don't have a pension. Most people don't anymore. The era of widespread private pensions is fading. Public sector workers, teachers, some union jobs, military, they still get them, but most workers today don't. So what does this video mean for you if you're in that boat? Here's the answer. Even if you don't have a traditional pension, you can build one. You can create something that functions like a pension, that gives you that same monthly certainty, that same emotional steadiness, that same foundation under your feet. And it starts with shifting how you think about retirement, from accumulating assets to building income, from chasing a number to engineering a stream. Think of Social Security not as an endpoint, but as a safety net, one you paid into your whole life, one that's designed to catch you when you need it most. For many retirees, Social Security is the closest thing to a pension they'll ever have, and the timing of when you claim it can dramatically change how much that safety net catches. Treat it like a pension, plan around it, maximize it. Beyond Social Security, you can create personal pensions through certain financial products, like annuities. I'm not saying they're right for everyone. They're not. They have costs, limitations, and trade-offs. But for the right person, in the right amount, at the right time, a properly chosen annuity can convert some of your savings into a guaranteed income stream that behaves like a pension. It can fill the gap. It can give you the floor your career didn't provide automatically. The point is, even if life didn't hand you a pension, you can still architect one. You can take a portion of what you've saved and turn it into income. You can delay Social Security to maximize it. You can choose paid-off housing to reduce your fixed costs. You can build that income floor brick by brick if you have to. It just takes intention. I want to ask you something personal. Have you ever avoided opening your retirement statements because you were afraid of what you'd see? You're not alone. So many people do this. They feel a vague anxiety, an avoidance, a hope that if they just don't look, the numbers won't hurt them. But here's the truth. Clarity beats anxiety every single time. Looking at real numbers, even scary ones, gives you power. Avoiding them only gives fear more room to grow. Let's talk about the people who quietly thrive in retirement. They're not the ones with the biggest portfolios. They're the ones with the highest ratio of guaranteed income to monthly expenses. If your guaranteed income, pension, Social Security, annuity payments, covers most or all of your essential monthly expenses, you're in one of the strongest financial positions a human being can be in, period. You can lose sleep over the news, or you can sleep through the night. It's not about who has more saved. It's about who has more certainty. The retiree with $400,000 saved and a $3,500 monthly pension is in a much stronger position than the retiree with $1.2 million in stocks and no guaranteed income beyond Social Security. The first one sleeps. The second one calculates. That's the quiet difference between freedom and stress. And here's something that creeps up on people. Most retirees underestimate their expenses. They look at their working life and assume retirement will cost less. Sometimes it does. Often it doesn't. Healthcare alone tends to rise faster than general inflation. Property taxes nudge upward. Insurance premiums climb. Subscription services pile up. Helping kids and grandkids becomes a quiet, ongoing expense. The early years of retirement can be more expensive, not less. A pension provides protection against expense surprises in a way savings can't. Because if your expenses creep up, your guaranteed monthly check is still there, full and steady. You don't have to sell investments in a down market to cover a rising water bill. You don't have to make panic-driven choices. The check is the check. You can absorb life's small shocks without it becoming a crisis. Let me give you something practical now, a framework you can take with you and use this week. Because understanding all of this only matters if you do something with it. Here's where I'd start if I were you. These steps are simple, but most people never take them. First, calculate your true monthly essential expenses, not what you spend on everything. Just the essentials: housing, food, utilities, insurance, transportation, basic health care. Get a real number. Most people are off by hundreds of dollars when they guess. Sit down for 30 minutes and actually figure it out. That number is your floor. That's what you must cover with guaranteed income. Everything else is flexible. Second, add up your guaranteed income sources: Social Security at the age you plan to claim, any pension payments, any annuities you already have, rental income if applicable. Compare that total to your essential expenses. If your guaranteed income covers your essentials, congratulations. You have the foundation of a strong retirement. If there's a gap, close it before you stop working. That gap is the most important number in your retirement plan. Third, look at your pension claiming options carefully. If you have a pension, the decisions you make at the start are usually permanent. Lump sum versus monthly payments. Single life versus joint and survivor. COLA versus no COLA. These choices echo across decades. Don't make them in a hurry. Don't make them based on what your coworker did. Get advice from someone who isn't trying to sell you a product. Fourth, plan your Social Security strategy as if it were a pension itself, because functionally, it is. Look at the difference between claiming at 62, at full retirement age, and at 70. For most people with reasonable health and longevity in their family, waiting pays off enormously. If your pension allows you to wait, that's a huge advantage. The decision of when to claim Social Security may be worth more than any investment decision you make. Fifth, and this is the one most people skip, Talk to your spouse. Really talk about survivor options, about what life looks like for the one who's left, about what happens to the pension, to Social Security, to the savings. Don't let those questions live in the shadows. Bring them into the light. Make decisions together while you both can. The kindest thing you can do for the person you love is to leave them prepared, not confused. You don't need perfection to have a successful retirement. You need clarity. You need to understand what you have, what you don't have, and what choices you can still make. The retirees who thrive aren't always the ones with the most money. They're the ones who understood their situation deeply enough to make smart, calm decisions. Knowledge isn't just power in retirement. Knowledge is peace. So let me bring all of this together. Having a pension changes everything because it transforms the entire structure of your retirement. It gives you a foundation instead of a balancing act. It gives you certainty instead of constant calculation. It gives you freedom to use your savings differently, to delay Social Security, to weather market storms, to sleep at night, to live without the quiet anxiety that haunts so many non-pension retirees. It changes how you spend, how you plan, how you love, how you live. And if you're someone with a pension and you've spent years feeling behind because you didn't save as much as your friends, I want you to hear this clearly. You are not behind. In fact, you may already be standing on one of the strongest financial foundations available today. The world taught you to look at the wrong number. Look at the right one now, and you'll see yourself differently. Your income needs to be greater than your expenses, but your confidence needs to be greater than your fear. Numbers matter, but how you feel about those numbers, that matters just as much. And that feeling, that confidence, it doesn't come from having more. It comes from understanding more. It comes from seeing your retirement clearly, without the noise of the financial industry telling you that you're never quite enough. Stop measuring yourself against the people with the big portfolios. Their numbers might look bigger on paper, but you might have something they'd quietly trade a chunk of their wealth to get. You have predictability. You have foundation. You have a check that comes every month, no matter what. That's not small. That's not behind. That's gold. And gold doesn't have to glitter publicly to be valuable. It just has to be real, and yours is real. And if you're someone without a pension, don't despair. You can architect your own version. You can build that floor. You can treat Social Security like the pension it functionally is. You can consider whether a portion of your savings should be converted into guaranteed income. You can make your retirement strong by changing how you think about money, not just how much you have. If this video helped you see your retirement in a new way, hit that subscribe button. I've got a lot more where this came from. Share this with a friend who's worrying about retirement. Send it to a spouse who needs to hear it. Pass it to an adult child who thinks they're behind. And remember, the goal was never to die with the biggest pile. The goal was to live the freest life. Take care of yourself, and I'll see you in the next one.